Hello, everyone. My name is Dan Cooley, and this is Deep Dive, where every week I dive deep with mortgage leaders and professionals about where they are now and what they've learned along the way. I'm really very happy to be joined this week by branch manager and mortgage loan originator Andrew Evans. Andrew is one of the nicest people I've met in this industry. I don't start every podcast that way, Andrew. You can go back and check. I've just gotten along with you particularly well right from the jump. So I'm very happy to have you here today. How are you doing today?
Doing great.
Awesome.
Looking
Awesome.
forward to this.
Thank you again so much for joining. And I'll say this again at the end, but if you are in South Carolina, North Carolina, Georgia, or Florida, and you're looking for a home loan, I could not recommend Andrew more. So Andrew, I guess let's start right off with, what was it like being Andrew Evans growing up? Where are you from, I guess is the first question.
I grew up in Tampa, Florida.
Tampa, Florida.
And
Okay.
growing up was hot and humid.
I would imagine it was on you. That's great. That's great. Are you? So I don't remember my baseball history enough. Are you a Rays fan? Were the Rays in Tampa at any point when you were there?
No, that was a newer phenomenon. Yeah, no. So growing up, I played a lot of sports.
Okay.
Ironically, the sports teams, the Tampa Bay Bucks never did real well when I was growing up. Actually, they're still not doing the best. Tom Brady brought some spark, but the only teams I watched were more college, Florida and Florida State, and then when Larry Bird came on the scenes, Boston Celtics. So my sports teams were out of the state primarily, but
That's so interesting. I mean, I'm a huge sports fan. I'm a huge sports history nerd specifically. So we could easily spend the entire podcast just discussing that phenomena and Larry Bird and Magic Johnson and that whole era. But let's not. That'll be a different podcast. We'll start a new one together and we'll talk about that. So you kind of touched on it already. You're born in Tampa. Were you raised there as well? Were you there your whole childhood?
yeah, I was. I was there until I was about 20 years of age, and then I relocated to Boston, Massachusetts, and then moved
You
to.
followed those sports teams. You weren't lying.
Yeah,
You were like,
I wanted to meet Larry Bird in person,
yeah.
and then I was there for just a little while, and then I landed in Greenville, South Carolina, which I'm here now. Greenville, South
Great.
Carolina, great area.
And what was it like being Andrew Evans as a kid? What was your childhood like, other than hot and humid?
Yeah, so we fished a lot. We fished a lot. In fact, the lake we lived on wasn't a big lake. I think I caught every fish twice. It was fun. We fished, we swam with alligators, water moccasins. Didn't think twice. That's what we did. Now growing up, I wouldn't swim in those lakes to save my life, but
Right.
when I was a little kid, that's just what you did. And played a lot of soccer. I played a lot of sports, but soccer was my go-to. You could always find me with a soccer ball, dribbling.
Did you play through high school? Like, were
I
you
did.
part of those? Or, yeah.
Yeah, I wasn't good enough to get a college scholarship or anything, but yeah, I played all throughout high school.
I actually find that really, really. That's actually a common thread I'm noticing interviewing loan originators, people in this industry, is like a love for sport, like a real sense of competition, but that's sort of like group so not competition for competition's sake or must win at all costs, but
Yeah.
kind of that sense of understanding sport.
Everything's a game. It's just a game.
It's just a big game. That's awesome. I have a 4-year-old and a 1-year-old, and the 4-year-old is currently playing soccer. I'm the coach. I know nothing about soccer. It doesn't matter because they're 4. But that's a crazy experience because you do have people that are sort of on the next level in terms of sport, like even at 4, right? So I'm sure there will be 4-year-olds that are currently sitting around like my son and picking flowers, on the field, that will catch up and will find a love for it. But there are definitely kids already where it's like, wow, you were just you're on a different level than everyone else here. Like just dribbling around, through and around everyone and scoring. There was a kid the other day who, I'm not fluffing the number to make it funnier, who literally scored 26 goals. It was like 24, 25, 26. I think it was closer to 26. And it was just like, we'd put the ball down, it would inevitably go to him, he would get past everyone and score. And it got to the point where like just everyone was just kind of like, wow, that was really, like even the other kids were like, wow, really good job. You shouldn't be playing with us. You should be with the older kids. This is amazing. So it's just funny how that starts to shake out so young. Like who might have that chance or that trajectory.
Yeah.
It's crazy. It's crazy. So all right. So you're born in and raised in Tampa. You moved to Boston. When did you start getting into the mortgage industry?
So when I relocated to South Carolina from Boston, I worked several different places. I'd worked somewhere for 6 months, and then it just wasn't what I liked. So I would do that maybe 4 or 5 times until I met somebody in the mortgage business. And so, training within the mortgage business isn't the best. The mortgage industry isn't really well known for its training. Your long way to learn it is you got to get in with both feet, which I did. And so the first year or two, I did it all wrong. But I enjoyed it, even though I was doing it wrong. It was still fun. I was making money, and it wasn't until I was probably in it for about 2 years that I met somebody that was rolling his wheel correctly, and so I just copied everything that person did, and and that's kind of how I got in. Just jumped in.
That's such again, just these. I don't know why in your episode specifically, all these trends seem to be converging in a way that makes sense. But I think what I'm hearing from you is, seeing someone on a different level from you, right? You could say that 1,000 ways, doing it better, or doing it different, but just sort of further along, and having the foresight to go, I'm just going to do what that person's doing until I figure out kind of how to live in this space myself. Seems to be such a common thing, not only for the mortgage industry, but I would argue for kind of any industry, like anything that you're looking to do. Have you had a series of, for lack of a better term, mentors along the way? Is that something you're still doing, like looking at people further along and trying to get there?
Yeah.
Walk me through that a little bit.
I am. So all of my mentors are in the business. It's possible, but as a mortgage loan originator, you really need a mentor that speaks your language. And so if they're not boots on the ground, taking mortgage applications, marketing, if they're not actively doing that in today's market, it's not that their mentorship is of no value, but I just find more value with someone that is at my level or better. And maybe they'll learn something from me. Maybe I probably have more to learn something from them. And sometimes you can learn in teaching, so that's good too. But yeah, somebody that's doing what I'm doing on a regular basis. So I have a lot of those people. They're on my cell phone. We commiserate all the time. Different situations. A lot of them are. They work at the same company I work with, Princeton, but other ones they work at different companies, and we talk. We work with people, and I've never had a person that fit in the box. People don't fit in boxes. We want their W-2s to fit in boxes.
It really is for such a competitive field, for such a we touched on it before, but also just I know that there's this kind of maybe old at this point way of thinking where it's like everyone's out for themselves trying to and it seems like specifically at Princeton but in general that you have there's a lot more camaraderie there than people realize. One thing I like to do and I normally do it toward the end of the episode, but it seems like a natural kind of segue is just to ask, like, what's some advice you would give to someone starting out in the industry, and one common one, not to take an answer from you, but is like find people that will answer your questions and that will teach you from their hard fought wisdom,
Yeah. So you said it. That's it. You gotta, if somebody's going to get into this business, they've got to have someone. And it can be more than one person, but I'd probably recommend just one. You can take two very successful loan originators, and they both are rolling their wheels successfully, but one of them may roll their wheel a little bit different. And I think for somebody that's getting into the business and they want to roll their wheel backstep a little bit, they don't have a wheel, they're looking for a wheel. It's harder to roll two wheels than one wheel. So I would find one person that is willing and able to really be on call 24/7. Because in this business, it's very competitive and you get phone calls. And so on my best day, I'll pull a statistic out of the air I just made up in my head. On my best day, I may know 60-70% of all the mortgage information that I need to know at any given time. I'll get a 100 A+ on a test, 70% easy. The other 30%, whether my brain is too small to know it, or it's just the industry in a constant evolving, change, I have to know where to go to get that other 30% of knowledge. Somebody that's just starting out has 0% knowledge. So they need somewhere where they can access 100% knowledge immediately, or they're going to lose the customer, because the customers now, they're very impatient. They want it now. So I think it's important, but I think the learning curve, it's a long curve, but I think that within the first 30 days, if the newbie is all ears, lots of questions too, but all ears, taking notes, soaking it in like a sponge, I believe that vast knowledge can be gained valuable within the first 30 days. And I just think but I think one person, they got to find somebody that's willing to really spend time with them.
Right, and not be afraid to sort of, I think the way of this world in reality, and if you find the right people, they'll always support. I can point to countless people in my life personally to prove this, where you can kind of hopscotch to people as you progress, right? And no one's going to take that. I mean, I don't want to say no one's going to take that personally. No one should take that personally. I think is probably something I would stand on. Like, if I've worked with people, they're coming to me for advice, whatever. Maybe they get close to my level or whatever, and then they realize they want to learn from this person. Go learn. Go. There's that old adage, if the student doesn't surpass the teacher, the teacher was a failure, right?
That's good, yeah.
And there's I think there really is truth there, and so I'm a big believer in, let's take industry out of it. If you really want to grow in your career, really ask people for help. Ask people for mentorship. Ask people for advice. Find the person that takes pride in helping you and work with them and learn as much as you can from them. Always respect them, but don't be afraid to then leave them and move on to the next person. That's part of the journey, I think. And I don't know. I can think of my career before this was actually acting and teaching acting, and I can think of countless people that were all ears, like you said, for me for a long time, and then they hit a certain point and they hop to the next person, and I never felt like, why are they? It's like, good, yeah, I don't know everything. Get out of here. Go learn more than me. And I think when you're really clicking, what you can do is then, hey, when you learn more than me, come back and tell me. Come teach me some stuff. It's a beautiful thing. That relationship, that mentor relationship, I think is undervalued, I think, in our society, in reality. And I think it's a beautiful relationship when you can find people that are willing to help you just for the joy of seeing you do well.
I
is a
agree.
beautiful thing. You actually you touched on it, that right now buyers are very impatient. I'd be remiss, honestly, to not just, it is May of 2022. It's rough out there right now. I mean, no matter who you are, It just is. I want to ask you about that. How have you been doing? What have you been seeing? What are your thoughts on this market right now?
Yeah, so I think the best strategy for a buyer is to they have to recognize the market. I wouldn't recommend that a buyer study the market unless they want to become a real estate agent. But I think they need a good realtor, good mortgage person, and I think the buyer just needs to buy. At the end of the day, a house is, it's a box on dirt. Houses don't float around in the sky. So it's a box on dirt. So you got to find the dirt. Where do you want your dirt to be? What kind of box do you want on the dirt? But first-time home buyers especially, or if somebody has minimal funds, maybe not the best credit, or they don't have a lot to put down, I have seen some buyers a little bit too picky. A little picky. They want to analyze the home, do tons of inspections on a home, and they have very little to put down, so they're really not negotiating from strength, and they don't realize they're in a seller's market. So I think that if a buyer is aware of the market, that it is a seller's market, if they have all the money in the world, or they're paying cash, they can throw their elbows around a little bit. But if they don't, they really need to come at this purchase market with a little bit of humility, and not be maybe too picky. Maybe not too picky. I think that's the key. I think if they're okay with a house having a few scratches and dents, it's okay. It's a good market. They can, paint the scratches.
Right.
Pop the dents out.
I think one of the best bits of advice I got when I bought my home years ago now was from my uncle, who by his own admission was not Mr. Fix It, Mr. had come to a different path in life. His father was like a judge. I'm not saying he didn't get his hands dirty, but he just he was just a guy that didn't necessarily have to do those things. And when he bought the house, he realized I want to be the guy that can, first he's young in his career. I'm sure there's a ton of student loan debt. They didn't have money to throw around getting someone to come in and fix everything. And he's like, I also want to be the guy that can fix stuff. And so he did. He just taught himself. This is pre-internet too, so it was a lot of knocking holes in walls and figuring it out as you went. And that was one of the best advice he gave me when we bought the home. Is listen, don't be afraid to knock some holes in walls. Don't be afraid to try to figure it out. He's like, if it has to do with the gas line, if it has to do with electricity, call somebody. Plumbing past a certain point, call somebody. But try stuff. Don't be afraid to get your hands dirty and whatever. And obviously not when you're coming into a dream home, you're picturing it differently, right? And I'm sure the HD TVs of the world and the set an expectation in people's mind of what it'll be like. But you're buying this box on dirt and then making it your home. And so, that, I don't know, that get your hands dirty. Don't be afraid to, you see, the paint. I mean, that's the one that I remember too, is hearing friends be like, we liked it, but the paint, the color. I'm like, the color? that's an easy fit. That's a weekend or two. And so, I think that's great advice for the buyer.
You still get to, if you hire a plumber, you're still allowed to keep your man card.
Yeah, that's the other thing too.
The plumber will give it back when the job's done.
Yeah. They take it, they hold it, they give it back to you, which is good of them. The other question is, so all right, so that's your advice to buyers. What are some of the things you're doing what would you say to other loan originators, especially continue with the theme, young, people younger in the industry? I keep thinking about these people that came into the industry in 2020, 2021, where it's oh, this is easy. What you do is you start, and then loans just fall from the sky to you, and then you're off running. Mark Gordon, who is the chief revenue officer here at Princeton, we were doing a podcast together, and he said before we really got into this market, a lot of people that look like rock stars last year might be looking a little different this year, and really the question is, what do they do with this moment? if I was coming to you, Andrew, and saying, Andrew, I came in 2021. What do I do at this moment? What are some things you might tell me?
Yeah. So mortgage business is very vast. You're in the mortgage business, right?
Yeah.
You're not boots on the ground originator, but marketing.
Sure.
And you help me. What you do helps me. So you're in the mortgage business.
Thank you.
But with my job, what I do, like Loan Originator, take applications, talk to borrowers, pull their credit, and that kind of stuff. I guess there's two components. When I first got into this industry years ago, it was more transactional. Where I saw the light was a friend that I had that was doing it. He added the relational component to it. When I first started, the relational component wasn't even a component. It was just transactional. The relational component is a huge component. So people, you got to enjoy talking to people. I'm married. I've got children, but during business hours, it's relational. Referral partners, real estate agents. You deal with attorneys, homeowners insurance agents, people of influence. I'm marketing to those people all the time, and I enjoy it. It's a lot of fun. It is a game. The game is, you want to win. What does it mean to win? Well, if you develop enough relationships with potential referral partners, there's a spinoff on that. Everybody has a different batting average. But if you never get up to bat, your batting average, it will be 0. If you get up to plate, you grab a bat and you swing, it is highly likely you will have a batting average. And whether that's 100 or 1,000, the person that has a 100 batting average, he's going to have to swing more and practice on his swinging technique. The guy that bats 1,000, not sure that even exists. I don't know why you brought that up.
But like a unicorn.
yeah. But I'm just assuming. So I'll just assume to be safe, and I would encourage any originator that gets into this business. I think just to be safe, they need to humble themselves and just assume their batting average is going to be 100. And so that way they can work on their technique. They can work on their people skills, and they need to work really hard. Because if you have a batting average that's 100, we got a lot of work to do. And so they just need to come at it humbly. And there's an older gentleman that used to do a lot of investing. He told me that, when you go to invest, there's 3 emotions that you really need to check. And it's your fear, your greed, and your pride. And I thought that was so good. I've never forgotten it. And I think that, if you're coming into the mortgage business, you got to treat it like a business. And I think those 3 emotions, you got to check them at the door every day as soon as your feet hit the ground. My fear, my greed, and my pride. And I need to be humble, and I need to learn. I can learn from people much younger than me that have been in the business much, a shorter time period than me. There's young people out there that have just gotten into the mortgage business that are kicking my butt. And it's humbling. It is humbling. And I can ignore them and disrespect them and say I've been in the business longer, but who would be the fool? I need to be open. I can learn from the young people. I can learn from the old people, but you never stop learning. When I alluded to the fact that I know 70% of everything I need to know at this date and time, I made the statistic up in my head, but my point was I'll never know 100%.
Right.
I've always got to be fine-tuning my skills. A lot of what I knew very, very well 15 years ago, only a small amount of that information is true today. And technology is something that I normally don't embrace initially, but you can't stiff arm it. It's, technology can be your friend. And sometimes I like the next, let somebody else go first. And I think there's something to be said for that. If new technology comes on the scene, you don't have to embrace it, but you can't stiff arm it forever. Let a couple of your maybe mentors or friends, maybe let them go first, but you got to embrace the technology. You just have to. It helps you move faster and stronger. And getting help, like you mentioned earlier, you can't be afraid to ask for help. The relational side of the business is huge. The transactional side is just as huge. Transactional would mean, you got to be competent at what you do.
Yeah.
If you get lazy and you don't want to be good at what you do, But you're relational, well, you're just going to spend all of your money meeting referral partners for breakfast, coffee, lunch, and dinner, and taking them out to happy hour. But when they send you a referral, if you haven't spent any time honing your technical side, your transactional side, when you catch the ball, you won't know how to run with it.
Or you'll fumble it.
Or you'll fumble it.
I mean, imagine building. Imagine we all have social, this like social credit, right? That we build up with people, and people are willing to forgive and to give chances, and they were late for that thing. They got young kids at home, or they're trying. Everyone's willing to make excuses for you if they like you, but that goes so far. And then once you lose it, it's like impossible to get it back. That's the other thing too. Like if you build up a good rapport with somebody and then you start messing up on their loans and dropping the ball and whatever, there's hurt feelings that are gonna come there too. Like I thought Andrew was my friend, we're buddies, and I can't believe this has happened. Obviously, not worried about you doing that, but you know what I'm saying. And so the what I hear you keep saying that I love is this idea of, it might even end up being the name of the episode, is like be humble, humility, being humble. These are I think that these are values or ideas that get I almost feel like they've been ruined by politicians where it's like you hear someone talking about being humble or humility and it's like yeah, you're saying the words you need to say. It's a way of being that I think is really, really important. You brought up younger people, kicking your butt right now or whatever some of them might be. I think is how you put it. Like, and you brought up the before you do anything, check your fear, your greed, and your pride, right? Like you realizing that there are people out there that came out of the gate hot, you could easily, look at your pride and go, I know more than them. I'm not going to take them seriously, right? That's a dangerous way to think. You could be greedy, like, I got to get those loans back from them. It's like, well, no, there's loans out there for everybody. Good for them for doing well. Like, come at it from that point of view instead. And fear, like, oh my God, like I have to do what they're on TikTok. I gotta start doing these TikTok dances and whatever.
Right.
I think that checking those things, staying humble, and realizing, look, it's a changing world, but people, we talk about it all the time. Real estate agents, referral partners are going to send loans to people that they know, they like, they trust, and that they're in flow with, meaning they're in communication with. You focus on those things. You double down on those things that you know are always going to stay true. And I look, it's so hard right now in this industry, and I appreciate that it's hard to hear, hey, build these relationships with people for when the market turns around. It's a hard thing to hear. It's like, I need right now there to be changes. But you start getting in flow with people, you build these relationships, you be competent, you work hard, you be honest, you be humble. The loans will come now, but thinking a year down the road, 2 years down the road is how professionals get an edge, right, in the future, I would imagine. Do you agree with that?
Oh, wholeheartedly. I was going to say something, Dan, that just popped in my mind, but
yeah, please.
I've shared with people, like the younger generation that talks about having swag.
Sure,
walking
yeah.
with swag. What's funny about that is, I look better in the mirror than I do in a photograph.
Yeah.
You know what I mean?
Yeah, I do know.
So,
100%.
But I do believe I have experienced walking with swag, and I don't think people that are watching me walk realize I'm walking in swag or with swag. It's all up here.
Yeah.
So in my head, whether it looks like it or not, when I've got swag, it's the way I think. Well, when the loans, when I've done a good job on the transactional side, and I've dotted my I's, crossed my T's, and I did my job, the relational side, the relationship side, relational with referral partners, it comes easier because in my head, whether I look like it or not in the video, in my head, I'm walking with swag.
Yeah.
And so the relational is easier, but like you alluded to, if they threw me the ball and I haven't been working on my catching or my running, and I keep dropping the ball, well, that quarterback, they're going to quit throwing to me. And there's going to come a point when the coach is going to take me out, and I'm going to be benched. And so at that point, I'm not even in the game. And so it's important. I've got to fine tune my skill set. One of the a lot of originators struggle with this is when I catch the ball, I may have to do some blocking, but blocking is not my job description. A job description is to hold the ball tight and run. So, I didn't have to, I'm not the quarterback. I didn't have to throw the ball. I had to catch the ball and run. I don't have to be the coach. There's a lot of job titles I don't have to be. Those other job titles, if I'll recognize it and I'll shelf my fear, my greed, my pride, I got to recognize that these other people they're on my team, and they're not on my team, for my glory. It's a greater good. We're all moving together. So, I may or may not get an attaboy. I may or may not give an attaboy or an attagirl, but I think the camaraderie, so relational, would go to my team, my processor, my assistant, the underwriter, you, Rich, who's in charge of our ship, HR, all these people are working together. So that's relational one. I don't want to disparage my team. That wouldn't be good at all. But the referral sources, same way. If they, if they believe in me, if I've been able to develop rapport, and they say, I'm going to give Andrew, the lender, a try with my customer that needs a mortgage. Well, I want to be respectful of that. That's their livelihood. Right. So, relational and technical or transactional, they're both important. I don't know which one would trump the other, but they're both really important things I have to work out on a daily basis.
I think it's the balance. It's the balance. You need to be able to get the loan and then knock it out of the park and have the team around you to do that. And you brought up your team here at Princeton. Sort of brings me to, I guess, I'm out of order a bit, but my final question. I think, what led you to Princeton? Like, what was it about Princeton that led you here? When you decided to come over.
Yeah, great question. So I had looked for about 1 year and 3 months. My previous company, they were not broken, but there were some disconnects that were just so evident to me. And so I looked long and hard for about 1 year and 3 months. And what I was not looking for was a dog and pony show. So many companies have dogs and pony shows, and dogs and pony shows are very exciting. They're very costly, but they're very exciting. And they do work. Well, that's why companies have them. But I needed something really for the long haul. Princeton had things that I was looking for, which I liked. They also had things that I wasn't looking for. But once I realized that Princeton had these things, made them attractive, and I began to see the value in what they had. One thing that I really appreciated, back to the transactional relational side, there are two key components in this business. When companies were telling me, well, you don't have to take a good application. Just take put a name and a phone number on a napkin and just turn that in and we'll run with it. Yeah, in my dreams. That happens. That's not reality. There is a mortgage loan originator. It's been tested and tried over and over and over again, and maybe sometime in the future this won't be true, but it's 2022 and it's true. As an originator, I got a lot of different names: mortgage loan originator, mortgage officer, loan officer. One name that I could ascribe to myself would be a professional mortgage application taker.
Yeah.
I got to be a good application taker. It's a tedious application. And so asking questions correctly to get on the application, telling the borrower what documents we need. And if I understand how to navigate the course all the way to closing, I can label myself as a mortgage Sherpa. I can walk with them side by side and show them how to get there. So I need to, communicate. I need to speak mortgage with my team. My customer doesn't want to speak mortgage. They want to speak customer. So, that type of stuff is really important. Princeton had that. Princeton, I didn't know it for sure, but I talked to enough people at Princeton. I talked to some loan originators that were at Princeton. What I understood was that Princeton wanted their loan originators to take good mortgage applications. I recognized that just from my interview. I interviewed Princeton people before I came on board. That was evident to me. I like that a lot. The marketing here, it wasn't rocket science, but the marketing component, they automated all the pieces of the marketing component that needed to be automated. But I still have some skin in the game. I'm responsible for there's certain things with marketing that the loan originator has to do in order to keep it relational. Because if it's just 100% automated, that
right, it dehumanizes.
Yeah, I wasn't looking for that. I wanted my piece. I wanted to put some skin in the game on the marketing side, but I'm not a marketing guy. I needed a lot of help with that. So Princeton fit that bill. They gave me just enough help in the marketing component, which was very attractive to me. And then I did appreciate very much that they offered the support that they needed so I could be a professional mortgage application taker.
Right.
And so it was a win-win. Those two components were all I needed. And I've been here not quite a year. And I am so glad I've been here. I've seen the problems problems aren't swept under the carpet. They're talked about, openly discussed. When we can find a fast problem, we find it. If we can't find a fast problem, we shelf it, come back to it later. So Princeton's not perfect. Not sure there is a perfect mortgage company, but it's an extremely workable model. Thoroughly enjoy it. Lets me do what I do well. So that's why I came. That's why I'm here to stay.
That's awesome. Yeah, I've been hearing. It's one of those. It's one of those questions that I ask. I debated asking it when I was coming up with the format for this show because it's like I don't want to make it about Princeton. It's not we want to have it separate. Make it about the LO. Make it about the processor. Make it about the Josh Teddy. Account executive. Make it about the people I'm talking with. Not make it about. But I feel like there's a reason we're all here, right? And there's something that brought everyone together on this team, and I think it's worth talking about because. There is, you said it, there's a time and place for a Dong and Pody show, or there's a time and place for, but what I've gotten to see from the profession of loan originator is that you have a lot of people that are in this because they really like people, they really want to help people find their homes, they really take pride in what they do, they see it as a calling, not just, a job, or, they see it as something that they're meant to be doing, and I believe that when you have those types of people, which is a valuable thing, you need a really great company that lives up to that too. It can't be like, cool, that's what you guys believe anyway, give us a napkin and we'll do the best we can and hopefully the borrower will be happy, right? You need someone that's going to step up and put their money where their mouth is, like with the Princeton Promise, like with some of these
huge
programs. And so I love hearing that story. I think that's really, really excellent. Well, Andrew, I really appreciate you taking the time out of your busy day to have this chat with me. I really meant what I said earlier. I've got to meet basically all the great LOs here. I really have a lot of love for all of them. But you and I, Andrew, have had a ton of conversations, and you're just an extremely genuine guy, extremely humble guy, which comes through in how you interact with me and with the members of my team and everyone else. And so, thank you for that. If anyone is in South Carolina, North Carolina, Georgia, or Florida, and you're looking for advice or a loan or just someone to talk to and about Florida State football, you can reach out to Andrew Evans. So it's Andrew Evans, EVANS .PrincetonMortgage.com. Where else can they find you, Andrew?
Well, they can find me there on my cell phone number. You want me to give that out now?
You're more than welcome to, sure, if you're comfortable.
Area code 864-313-0602.
Well, there you go. Reach out to Andrew Evans anytime with your questions. And Andrew, thank you so much for meeting with me today.
Yeah, enjoyed it, Dan. Hope you have a good day.
You too.